It's so much easier to work with the benefit of the hindsight. We all know that. So today's 7th of March 2020, and we start with the Monday that just went last week, Monday 2nd of March 2020. Why are we doing this? Because we can actually tell how it all unfolded, and it helps us predict the future somewhat. So can we tell what's going to happen in the week coming up? How the markets are going to go, up or down, because they've been up and down, a lot more down than up. I'm still of an opinion, and not a financial advice, that you should be selling into the small rallies. There's still pullback going on, in my opinion. That is based on other people's research, to be honest, and I just bring it to you and put it in as my opinion only. And something very interesting. My mum has been of an opinion that you should buy a house and that sort of stuff, which that's not completely open up mine and everyone else's financial situation, but buy, let's call it, another house. For the first time in a very long time, she says, you know what, this is not looking good. For the first time, she says, even now, I'm looking at these prices in the property and what's happening in the stock market, and I am not convinced that this is not going to tank, because housing is not isolated. If the money dries up, if the jobs dry up, then people will just have less opportunity and ability to go up to the bank or other lenders, and say, can I borrow $1 million? All these sectors and businesses that we talk about are bleeding. They're not bleeding for nothing, and that is actually going to have to translate into them laying off people. We in Australia think that we are immune to many things. We are not. And are we immune to the thing that everyone's talking about, which I'm not going to mention the name because I don't want my channel to suffer? Chinese tourists are not coming, and they're not going to be coming for a while. Then you've got Chinese students not coming, and they're the top 5 industries in this country. So every one of these little blips up, so it drops. This is the Carnival Corp, Carnival Cruises, right? Obvious sufferer from this uh, pandemic, whatever, you know what I'm talking about. So it drops down, there's a little blip, everyone's thinking, oh yeah, maybe it's coming back. At every one of these points, people thought, oh, it's turning back, turning around, especially something as strong as that. This is just 5 days. Strong as that, you're thinking, well, this is going to end up being such a good V-shaped recovery. It wasn't to be. It went up there and you thought, oh well, I should have got in, because it kind of rallied. If you were smart and owned those stocks, you probably sell into that small rally, and then it just comes down and goes sideways. Do I know which way it's going to go? No, I don't think it's going to go up anytime soon, because they are not letting up the scaremongering. And it's good for people in the know, for people who are not easily scared and afraid, for people who don't believe everything the news tells you. So why are we reviewing ABC here down in Australia, ABC News or ABC The Business program? You can actually read between the lines, and they do bring some kind of statistics, easily digested statistics, but it's easily kind of debunked in many ways. And to give them some credit, they do ask good questions at times. Okay, so we start once again Monday, just gone, 2nd of March, with the business. And let's remember that that's just one day before Reserve Bank of Australia actually dropped the rates another 0.25%, which is really 33% down from a 0.75 to 0.5 official cash rate. So this is before that just happened.
An RBA rate cut potentially to the rescue, but can cheap money inoculate empty businesses?
If it's a situation to continue for another half year, probably we'll have to.
And this is one of those, if you believe it.
And house prices again setting new records. Why the property market shouldn't get another rate cut.
So, I mean, again, to be fair, why property market shouldn't get another rate cut, uh, that's a fair observation, fair call. Obviously, RBA didn't listen to it, as we'll see the next day. On Monday, they cut the rates again. So it
rocked the local markets again, the ASX dropping for a seventh straight session. Today's falls come on top of a horror week, with around 240 billion wiped off the local market. Today's falls come on top of a horror week, with around 240 billion wiped off the local market. The All Ordinaries dropped as much as 3% in early trade today, but that turned around with the index clawing back most of the losses by close. Markets are partly pinning their hopes on a 25 basis point cut tomorrow from the Reserve Bank.
All right, let's keep that one at the back of our mind. So markets are pinning hopes on potential rate cut the next day. So that's supposedly going to be positive for the markets. Only little did they know that it absolutely spooked the markets, including in America. Why are they cutting those rates down to quote unquote and past emergency levels so quickly out of cycle? So again, that this slump is real. The companies are cutting their forecasts.
Major companies in the resources, biotech, travel and property sectors like Qantas, BlueScope, Cochlear and Fortescue have cut over $500 million from profit expectations so far. Since last month's peak, the broader All Ordinaries index has dived 11%, so more than $2 billion in wealth has been incinerated in less than 2 weeks.
And here's a good point.
Obviously, when share markets come down, it has a negative wealth effect. People feel their superannuation go down, their wealth in the share market goes down, and that has a flow on to consumer spending.
So, wealth effect. So this is what I was saying to my mum. If you have a share portfolio or everybody has a superannuation fund and it drops, how are you feeling? Good or bad? Are you more likely to go shopping? Maybe little things like retail therapy, sure, but are you more likely to go and shove couple of $100,000 into the deposit for $1 million house, or less likely? The answer, in my opinion, is obvious. It's a no-brainer. You're going to sit on your hands, sit tight on your money, and just wait and see what happens. And that's exactly what government doesn't like, because there's no paying taxes if things are not going up, because when things are going down, there's no capital gain, there's actually capital loss. So the government has to pay some of that money back to people claiming capital loss, for example, which is why they're cutting interest rates, thinking that they're going to save it.
Be aware of the irrationality of really doing a lot more damage to the economy, with people staying home and saying, I'm not going to go to, I heard someone say that, their parents weren't going to go to a shopping centre somewhere.
That's exactly what I'm talking about. People are less likely to go out, spend, be happy, because A, there's this thing that could kill you, supposedly, and which is called the seasonal flu, by the way. That's all I'm talking about. I don't know what everyone else is talking about. It's just a normal cold, seasonal flu, viruses that happen every year. So yeah, you got doom and gloom off the share market. You got this thing going around. You're not happy. When you're not happy, you don't open up your wallet, and when that happens, it's a snowball effect. So it
will do more damage to the economy than an overheated housing market. But the RBA has only 2 cuts left before it's forced to consider unconventional measures like quantitative easing. Remarkably, some banks are forecasting it will use those 2 cuts in quick succession, starting tomorrow.
Honestly, I mean, so they're going to cut it down to 0. So if you have any cash, any money in the bank, so you take all the risk that the bank's going to go belly up and lose your money, and your reward is like maybe they'll give you 0.5%, 1% at that time. So what do you do with it? You know what? Not financial advice. If there is a pullback in precious metals, get some bullion and or coins. And then when the stock market isn't as heated up as it had been, not very overvalued even before, but it's cheap. You buy it at the discount. This is what smart money does. It's just that the entry point needs to be right. The entry point need to be right for us to maximize that bargain. It's on sale. Imagine if the stock market all up from peak to this downturn makes it down, say 30%. I mean, you're getting something 30% off from where it was, not long ago. It's a sale. You buy something that's on sale. You don't buy something that's absolutely premiumly priced like housing. Not financial advice. How can it be from me? I'm nobody, right? I don't care.
We haven't seen this sort of event for quite a long time, if ever. And so the uncertainty at the moment is quite high, but it looks to us like the impact on the economy is going to be quite material.
Material impact to the economy, and the uncertainty is very high. Not good at the moment.
I mean, it could not have come at a worse time when confidence in the Australian economy is already low. The global
As much as I don't like quoting the mainstream talking heads, they're not wrong.
It could not have come at a worse time when confidence in the Australian economy is already low. The global economy was just starting to show some signs of life, and then these travel bans are coming in and having a big impact. This will be very significant for the Australian economy in the This will be very significant for the Australian economy in the March quarter particularly. The question is...
So I think another piece of advice to myself, looking in the mirror, and obviously everyone else, would be to put your head down, bum up, and just work hard, keep your job, look for opportunities always, and sit tight. Don't be afraid though. Don't be afraid. It all sounds crazy and scary, but it just isn't. It's happened before many times, just maybe not in our lifetimes, and maybe it has. I mean, GFC was pretty scary, except that this time is affecting us, and not so much was the case as much back in the 2007, 8, 9s. We kind of were lucky because China was still pumping. That's exactly opposite right now, so that's exactly not the case at the moment. Just a little bit more on China. Again, I am not against China. I'm definitely not pro-China. It just, I look at it as it is. We, Australian economy, depend a lot on what happens in China, and not a good things are happening in China. Let's put it just simply. And that's just not going to be good for us. And I just look at it on the face value. Nothing goes up in the straight line.
To where it all started, China. Manufacturing data out over the weekend was awful, the weakest on record. So it's now expected that China's GDP will shrink from 6 to 1.2% this quarter. Studios remain shut to us. So China. Manufacturing data out over the weekend was awful, the weakest on record. So it's now expected that China's GDP will shrink from 6 to 1.2% this